What's good, everybody? In this video, I'm going to be covering market conditions that can exist where you do not want to enter the market. After all this time that we've been trading and analyzing charts and learning all these different patterns and all that stuff, after all these years, I'm pretty sure we have every type of impulse covered, right? Whether you're doing pivot points, swing trading, if you're doing channels, if you're doing Elliott waves, if you're doing Fibonacci retracements, if you're doing trend trading, all of the different styles of trading out there, all the different strategies pretty much cover every opportunity that could potentially exist. I'm pretty sure. I could be wrong, but I think we have it all covered. But all of these strategies still take losses. Okay, so what we need to do, if you have a win rate of 50%, obviously you can still profit with that because your wins are larger than your losses. But think about this for a second. If all you do, instead of looking for more opportunities to win, if all you do is look for opportunities to avoid the losing opportunities, those ones, if you can just get rid of those by 20%, you're not going to get rid of them all, but if you can just minimize that by 20%, your win ratio goes up to 60%, and now you are in an upper echelon of traders. It's a wonderful world once you're there, because then you can start doing things like increasing your risk, right? Because your win rate is so much better. Obviously, do that with moderation. So these four conditions are what you want to avoid. I've noticed out of the 4 years that I've been trading, when these four things occur, and I get a notification saying to go ahead and enter the trade, I check my indicators, everything looks great. But these four things, if one of these exists, my success rate in entering the market goes down. So, yes, I've got my rules, but then I have to have some exemptions to my rules, okay? Now, how did I come up with these? In the same way that I came up with the indicators and strategies that I use for trend trading. Okay, so I take a look at these impulses and I say, what are the commonalities between these highs and lows and lows and highs? Like, what happens whenever we have a successful impulse? What happens during those times that are common? And I look for that. Now, I do the same thing to analyze my losses. Out of all of my losses, what are the common things that occur? So I came up with these four things that help me stay out in my losses. One of these four things existed. Okay, sometimes more. But so now let's go to cover these out. So number one, you do not want to enter the market if you are 6 or more bars away from the previous high or low. Okay, so let's take a look at this example. What is this? The Australian Swiss franc. Okay, so this here is a low, right? If you are 6 bars away from that low, don't enter the market. If you get your confirmation 6 bars after this, don't go in. And the reason why is because, typically speaking, even though you have your indicators and it says it's going to take you to your destination, the chances of there being a pullback are also there as well, because you're starting to get further into the trend. So because you're further into the trend, there's going to be a retracement at some point or the other. It's a good idea to avoid that retracement because it could potentially take out your stop loss. So I avoid going in if I am more than 6 away from the previous low. Now, if a new low gets created, like right here, obviously, and then I get my indicator, I can go ahead and enter the trade because a new low has been formed. And typically speaking, if I'm on a trend, that new low is higher than the previous low. So if you are more than 6 away from that one, don't go in because that retracement might take you out. Now, some people might say, well, just move your stop loss to beyond the previous low. Yes, I get that. But sometimes, especially if I'm 3 or 4 bars in and I get that indication, now I have to move my stop loss so far back that my amount per pip that I'm making goes down quite a bit. And it may not be enough for me to justify, because I'm extending that stop loss so far, that may make it difficult for me to reach my target with the profit margins that I like to have when I trade. So I don't do that. I trade the trend, and my ATR dictates what my stop loss is going to be. So that's my rebuttal to why don't you just move your stop loss to below the previous high or low. Okay, the next condition you want to avoid is if it's the first confirmation you get against the trend. Okay, so if you're going in a certain trend and then you get an indication to go down, don't take it, because that could just be the retracement to get you ready for the next impulse. So don't take the first one. Wait for confirmation that you are actually, so then if you have a high and then you start to go down and you get the indicator, don't take it, because if it is going to go down, chances are that it's going to retrace back up again and maybe test that previous high or have a high that's not as high. And then you get your confirmation that you are actually switching trends and you can go ahead and enter the market. So don't take the first one. Take the second one. And you might lose some opportunities. I lose opportunities. I lost one a couple weeks ago where I could have taken it, but I didn't, because my rule says don't take that first confirmation, and I could have made some money off of it, but I would lose more in the opportunities that don't work out for me. So next, consolidation. This one's pretty straightforward. I have a video about it. You can go back through my videos on YouTube here, and you'll find the consolidation video. Don't enter the market when you are in consolidation. It doesn't matter what your indicators are telling you, no matter what confirmations you have. If you are inside consolidation and you're entering a trade, you're an idiot. Well, you might not be an idiot, you just don't know. Okay, next, the last one. If the bar that you get your confirmation on to enter the market, if that bar is greater than 2.5 times your ATR. Now, what do I mean by that? Let's see if I can find an example. Here's one right here. So we're coming down. Obviously, we have a strong confirmation from Lux. Great big bar. It's exciting because we've got all the confirmations. But this bar is greater than 2.5 times my ATR of the last 14 bars. So that, typically speaking, is going to be a banker's candle, trying to take some positions out. There's liquidity in the market. People probably, so for instance, in this market, this space here, people were getting confirmation to go down, and it was coming down nice and slowly. So they go ahead, and probably in this area here, they're going to go ahead, because this is a confirmation right here. Well, sort of. I wouldn't enter this one. But so this one here is a, here's a continuation. This could be a potential continuation trade. But then what happens? You don't reach the target, and then the bankers take it. Now, some people would be like, oh, here we go. This is the direction we're going now. So they go ahead and take this, but then, of course, they get stopped out on the very, maybe in the next bar, 2 bars for sure. So you don't go in when the bar is so big, because that's typically speaking just a candle where the institutions went ahead and moved the market in the direction they wanted it to take positions, and they're just going to go back to the way that they were before. So don't take those kind of things. That's the fourth one. So now let's run through real quick. I want to run through some scenarios so you can see it kind of in action. I'm not going to go through like a full back test. I'm just going to show you examples. What is this here? This is May the 10th. Okay, so here we have confirmations all across the board. Yay, we can go down right here. Well, we don't have it from Lux, but I have enough other ones to show that this is a confirmation. But here's my previous high right here. Some people would say this is the high. I call this my high because that's where the close was. And so this is my first confirmation. Boom, let's go down. No, I'm not going to take it. I'm going to wait. And yes, I missed out on some money. I get that. But if I take a look at the statistics, backtest this for yourself. Don't just take my word for it. Backtest this yourself and see whether or not I'm accurate. But I've done a bunch of testing on this. And when I enter the market on the first indicator against the trend, typically speaking, I get stopped out because it's not actually switching trend. It's just pulling back. Okay, like for instance, what happened over here. Here's an impulse. It pulls back. We get indicators. We get indication right here, and this would not extend out to a take profit. No, it's not far enough for a take profit. So therefore, since this is not far enough for a take profit, it's going to work against me, and this was just a retracement. That's all it was, and it started to continue going forward. So that's why we don't take the first one against the trend. Let's continue onwards. Where is the next confirmation? It's actually down here, right here. So yeah, then this one is good to take, and so then you still it's a great opportunity. You still profit. Okay, so then we look for the next one. Here we go. So this is a confirmation going up, but we just finished a new low, so we don't take it. We don't take it going up because that's the first confirmation. Next one. Here is a downward. Nope, we don't have everything because we would need a volume breakout to say that this is good to go. And you know what? Actually, I'm just going to go ahead and hit replay here because I can see something that you wouldn't be able to see in live markets, and I'm going to show you here in just a second. And it is actually so here we go. This is going up again. So we had the first one right here, right? And then it came down, and we got another confirmation. But guess what? I see, this is what I saw. We have this high here. Yep, and this high here. Actually, right there. Yep, so there's the high. Here's the low. We have consolidation forming because this low, this high did not beat out the previous high, and this low did not beat out the previous low. Okay, so now we are in consolidation. Well, that's not a low. I see it. Come on, where is it? Low here, actually. Yeah, that's right. So we won't go to the bottom of the wick. And now why do I do this? Because again, I don't count bank manipulation when I'm looking for highs and lows. I don't count it because it's not a natural occurrence in a free market. So here's my low right here, and this is my high. This low did not beat out this low, and this low did not beat out that low, and we've got now a new high forming now. So I'm not a fan of this, right? We've got consolidation forming already, so I'm just going to leave it. Here's another, so now this is the high that did not get beaten. Still in consolidation. Still in consolidation. Now we're at the previous, this high here. Denied. Yeah. So, okay, now we're below. Okay, so now that we're below, we can look for the next opportunity. We don't take the first one out of consolidation because there's usually, after consolidation, there's market expansion before it goes in the direction that it wants to go. And it might go down, but we don't take the first one because that's part of this consolidation rule. So if I'm in consolidation, I'm not taking a trade. And when I leave consolidation, I'm still not taking the trade. I'm waiting for my next confirmation. Next. Here we go, coming back, well, now a little bit more down, coming back, and we've got confirmation here, but we're not above. This is the first, this one here is the first one, but we're not above my trauma line here. This is another thing too, is that I need to see me actually pass this trauma line. This is a moving average of the highs and lows. So this is another one of those trend confirmations that I have. So these are confirmations to go up, but I'm not actually going to take any of them until I'm above this trauma line. And even if I was above the trauma line and it was the first opportunity, I'm still not going to take it. So now we've got coming down, but not a volume breakout. Well, actually, let's see, 1, 2, 3. Yeah, no, we're good. That's not an example I can use. Okay, so actually, here we go. Ha! There's our confirmation to go down. So this is great too, because this high did not beat out this high, right? So this is a confirmation going down. However, look at what's my first rule that I mentioned? 6 or more from the previous high. So this is not a high here because this bar here is higher. You need to have 2 bars to the left to call it a high. So this is my high. Now I count the bars. 1, 2, 3, 4, 5, 6, 7, 8 before I get my confirmation. So I'm not going in because I'm too far into this impulse. And maybe I missed that one. That's fine. That's my rule. Nope, look at that. So if I would have went in, I wouldn't have reached my target, and I might have already hit my stop loss. Not quite, no. But now I would have, for sure. Look at how high that went. So yeah, so here, didn't extend, came back up. Why? Because it was more than 6 bars from the previous. And now we've got confirmation going up, don't we? Because we're above that trauma line. But this is the first one, so we don't take it. See? That's the thing. That's the thing. So now we are kind of hovering here a little bit. Great movement up here. So we could have taken that. I get that. Probably would have won. But I don't do it because it's just too risky. Coming back down. And then some people say, well, there's a strong confirmation, right? It went from normal to strong, from Lux. Why don't you take it? Well, the reason why I don't take this one is two. Number one, I can see that this bar is greater than 2.5 times my ATR. There's another one. I'm not going to take it. And it's a good thing I don't, because look at what happens. It pulls back right away, and because it's so high, my ATR times 1.5 is only going to be down in this area, right? So because of that, then my stop loss is going to be set around in here. Let's see here, 53. So yeah, so my stop loss is going to be in this area here, and that would stop me out. So I'm not taking it. Now we're crossing back above, but I don't have a volume breakout, so I'm not going to take it. Now I've got a still no volume breakout going up. Anyways, I think we covered everything. We covered the true range, confirmations against the trend, 6 or more. Yeah, so I've covered everything that we wanted to cover. This concludes the video. Obviously, there's a lot more to it, but I wanted to show you guys these simple rules. Start using this, back test it, and tell me what your results are if this is helpful. Leave a comment below. Subscribe if you like this kind of content. This is where I love to share my trading strategies, is in these little things that really can make a big difference. So tell me whether or not it's helpful, and if it isn't, tell me what helps, what works for you, because that's how we all improve and get better at this. So yeah, that's it. If you have any questions, let me know. Check out the stuff in the description. Might be something of interest to you. And yeah, sayonara.